Abnormal gain. Particulars of S Limited in which H Limited acquired shares are as under. So basically there are two companies here, H Limited and S Limited. H Limited acquired shares in S Limited. Okay. How much? We'll just know. The particulars are balance in the profit and loss account. This is given as on 1/4/2011 and 31/3/2012. Then you have general reserve balance again on 1/4/2011 and 31/3/2012. Right? If there was an abnormal gain of 40,000 on 30th June 2011, prepare analysis of profits assuming H Limited holds 80% of the share capital of S Limited and the acquisition of shares took place on 30/12/2011. Now if we were to just plot down the series of event in the shape of a timeline, we get 1/4/2011 here, we get 31/3/2012 here. Okay, there's an abnormal loss on 30th June. June 30, there is an abnormal gain of 40,000 and the acquisition took place on 30th December 2011. Let's make this 31 actually, right? Let's say 31. Now you are asked to prepare an analysis of profit, right? So let's see how do we do that. Analysis of profit, right? The acquisition date is 31/12/2011. So what all do we have here? We have profit and loss account and general reserve. Profit and loss account, general reserve. Now we need to allocate the balances which are given to us as on 31/3/2012 into pre-acquisition profits and post-acquisition profits, right? So these balances will comprise of what? They will comprise of pre-acquisition or capital profits, this can be either profit and loss account or general reserve. Then you will have post-acquisition profits, or there could be post-acquisition transfer to the general reserve, right? And then there is a total. Total obviously has to be the closing balance, which is 80,000 and 20,000. Right? Now if you look at this table, we are told that the acquisition date, this is my acquisition date, right? So all the period prior to this, or all the profits prior to this period are pre-acquisition profits, and all the profits after this date are post-acquisition profits, right? So I'm told that the opening balance is 30,000 and 20,000 respectively. If this balance was standing as on this date, obviously what does that mean? That means these profits were earned prior to this date, right? And we know that any profits, for that matter, which are earned before 31st of December are capital profits. Therefore, this balance, both of them, 30,000 and 20,000, are capital balances, right? But the other factor which comes into picture is that the balances as on this date are clearly capital profits. What is the profit which I earned during this period? The profit that I earned during this period can be easily obtained by reducing the opening balance from the closing balance, right? Similarly, just like you have the closing balance here, you have the opening balance here. This means that the post profit, which includes some part of pre-period and some part of post-period, are how much? 80,000 minus 30,000, 50,000, Similarly, 20 minus 20, there is actually nothing in general reserve, right? But what I know is that some part of this profit is actually capital in nature. And how do I know it? This 50,000 represents the total profit I had earned from this date to this date, right? Out of this date, I know that 9 months until 31st December again are pre-profits, and 3 months are post-profits, right? And in the absence of any detail, we assume that profits have accrued evenly during the year. But in addition to this, one point which I need to note here is that this profit of 50,000 actually includes an abnormal gain of 40,000, which happened on June 30th. So basically this 50,000 includes an abnormal gain as well, right? Which should actually go specifically to this date. But currently what is happening is, if I allocate this 50,000 right now, let's say I do 9:3, 9 months and 3 months, what I will do is, out of this 50,000, I will allocate 37,500, which is basically 9/12 of 50,000, and 3/12 of 50,000, 12,500 as pre-acquisition and post-acquisition profits respectively. But that is not the correct position. The reason being that this 50,000 actually includes an abnormal gain of 40,000, which we know clearly belongs to the pre-acquisition period. Hence, to first normalize my profits, I will reduce the amount of abnormal gain from this profit, 40,000 minus. The reason for subtracting is this, that once that gain came into here, the profit would have been increased by that amount. So I'm reducing it. So I get 50,000 here, I get 10,000 here, nothing. Now these normal profits belong 9 months to the pre-acquisition period and 3 months to the post-acquisition period. So I will allocate this in the ratio of 9:3. Hence, 9 divided by 12 into 10,000 will be subtracted from here, which is nothing but 7,500. 7,500 I subtract from here. So I will get 57,500 here and 2,500 as post-acquisition profit. Right? Now I know that there is an additional abnormal gain of 40,000 which belongs to capital profits. So I will add back this abnormal gain here, because I need to know how much are the capital profits and how much are the revenue profits. Right? So I get 97,500 here and 2,500 here. My holding company owns how much? 80% of this stake. My minority has 20%. So 80% of this goes here, 20% goes here. So 20% will be how much? Let me use the calculator. 97,500 into 0.80. 78,000. Okay. And 19. Right? Then 97,500 into 0.2. 19,500 goes to the minority. Similarly for this, 2,500. So that's how I have just carried out the analysis of profit. It's pretty simple actually. Whenever you have an abnormal gain included in the profits, that means your profits are overstated by that amount. Right? So first you need to normalize. How do you normalize? You reduce the abnormal gain from the post profits, get the normal profit that you would have earned if this abnormal gain was not there. Then allocate these profits between the pre and the post. Now, if this date was different, in the sense, let's say that if this was 1/4/2011, then there was no allocation which was required, because the pre-period would have been 0. But because here we had 9 months, so we just allocated this between these two parts, got the normal profits, added the abnormal gain because it pertains to the pre-acquisition period, and got the total pre-acquisition and post-acquisition profits. which were then allocated 80% and 20% between these two respectively. We hope you would have liked this video. If yes, please hit the like button at the bottom. You can also share this with your friend who may be interested in this. With this, it is signing off. This is Arinjay Jain, your educator for this video. Thank you for being with us today.